This information is marketing communication. The views and opinions contained herein are of Johanna Kyrklund, Group Chief Investment Officer and Global Head of Multi-Asset Investments, and may not necessarily represent views expressed or reflected in other Schroders communications, strategies, or funds.
In my last update, I outlined how we expected a U-shaped recovery from the lockdowns, and certainly events in recent weeks have supported that view. We've seen a continuation in the rise in infections in the United States, which really reminds us of the importance of social distancing and highlights the likelihood that economic activity is likely to be suppressed for the foreseeable future while we work to contain the virus. At the same time, however, we've seen substantial fiscal monetary stimulus, and this has helped equity markets to rally. We continue to focus on the beneficiaries of central bank liquidity. From a regional standpoint, we've turned more positive on Europe, and this is because the containment of the virus has been more effective in Europe, and this allows lockdowns to ease a little bit over the summer and provides a bit of cyclical respite in the region. Valuations are quite cheap, and also the authorities in Europe have made it clear that they are supportive of peripheral bond spreads, which is helpful to sentiment in Europe overall. Within equities, although some of the cyclical areas look very cheap, we remain focused on higher quality exposures, and in particular like the technology sector, because it's a clear beneficiary of the COVID-19 environment. So all in all, we're benefiting from the liquidity provided by the central banks, but we still have an eye on the cyclical outlook because we're concerned that growth is likely to be weaker rather than stronger. So this is not a time to take excessive risk.
This information is not an offer, solicitation, or recommendation to buy or sell any financial instrument or to adopt any investment strategy. The material is not intended to provide and should not be relied on for accounting, legal, or tax advice. Reliance should not be placed on any views or information in the material when taking individual investment and/or strategic decisions. The views and opinions contained herein are those of the authors or the individual to whom they are attributed and may not necessarily represent views expressed or reflected in other communications, strategies, or funds. The value of investments and the income from them may go down as well as up, and investors may not get the amounts originally invested. The forecasts included should not be relied upon, are not guaranteed, and are provided only as at the date of issue. Issued by Schroder Investment Management Limited, 1 London Wall Place, London, EC2Y 5AU. Registration number 1893220, England, authorised and regulated by the Financial Conduct Authority.